Guys, so I just want to go over very quickly kind of everything we've gone over before and put it all together really fast and just show you one or two examples of everything um, in the works and how it kind of plays out. So this is pretty much what you would do. This is the market you would see um, before the open, right? So what I do immediately every day is I mark the last 45-minute high, the last 45-minute low of the prior day market action. Okay, so that's going to be up here and down here, right there. Okay, so okay, there we go. But the thing is, we have to have our 200 SMA inside of this box because this is the Fab4, so we're getting everything inside 200 SMA, the 20 SMA, the highest point of price, the lowest point of price within the last 45 minutes. So this is what my chart would look like prior to the market open. Right now, if we open up here, then I'm looking for longs. If we open down here, I'm looking for shorts, right? That's just a basic Fab4. Nothing too special there, right? So this is pretty much it. There's no after hours. There's no pre-market. There's nothing I'm really looking at. The only thing I'm looking for is to make sure these SMAs are relatively narrow. They're in at least a neutral state. They're not wide like this. This right here, the Fab4 box would just be it would be way too big. And that's not what we want to, we don't want to see that. We don't want to see that. We want to see a rectangle, a tighter box with price because then a move could happen. It's the tighter it gets, the more it could squeeze. Kind of think about it like that. But anyways, okay, we're going to keep going. Boom, we get the open here. We open above. We open in a nice bearish candle. So we're like, don't really care about it. But that doesn't hesitate. That doesn't change our bias. We're still looking for a long entry, right? Right here, there's nothing. There's no color change. It's a nice power bar, but our SMAs are not in the right spot. So there's nothing. There's nothing for us to enter here. We wait. We wait. We wait. We're still waiting. The SMAs are not correct yet. Right here, boom. So once you see this, sorry, right, boom, right there, you can see. Hold on, let me get my marker. The SMA cross. You can see the cross, boom, and this 20 starts pointing up, and the 200 gets more flat. Right, whenever that happens, that's an indication of price could trend to the upside and create a wide state from the 200 and then come back down later, kind of like that, right? So only when the 20 is above the 200 are we taking long trades, right? That's why we didn't enter here. So as soon as you see this 20 up above and the 200 flat, all you do is wait for this big green candle, the high of this candle, to take out this red candle. So as soon as this green broke above this red, I was in. 1638.80 was my entry price. No hesitation, no waiting on close, nothing. Stop losses right under the event, about 1637.10, somewhere around that range. And then our goal is to ride this up to new highs and only exit once price gets back underneath the trending 20. Okay, so let's just see what happens. Right, so here's our entry event. Hold on. Let me try to, right here, let's just, boom, boom. Okay, I guess I can't do it. Well, there we go. Okay, so right here, that's our entry event. Boom, there we go. And then after that, our stop is down here. So we're just pretty much riding this 20 now we're green. Everything's still up here. We're new highs. Up here, we're new high. I mean, this is a great trade so far. You're taking profits. Everything's good. You bounce around the 20, still go up a little bit more. You're still holding that 20. You're not closing below that 20. And then, boom, you get a solid break and close. Bearish candle pattern right there. And that, but I mean, you should have already taken profit up here, up here, up here. I mean, this was a great trade. So this is just what it looks like. And then when the state becomes wide like this, where you see this separation in between the 20 and the 200, when you see this, usually it's going to come back down at some point, right? So we're just trying to catch this initial run, this initial squeeze from this Fab4 box. This is what we're trying to catch, and the 20 is our floor, our support. Then this one can be looked at as the floor, right? So you got two levels of support here. That's why we trade up whenever the 20 is above the 200, and whenever we trade down, the 20 is below the 200. Okay, these are the reasons why we're trying to catch that move right out of the box, and then see what price does once price goes back and starts falling down or not falling down, whatever the case may be. And then, so you see here, the state became wide, right? We caught this move, which is plenty. Stock still went up. It broke the 20 a few times, so there's nothing too crazy there. But look at these power bars compared to all these candles. They're small candles. But anyways, my point is, this came back down. See this? Comes right back down, goes into another tight spot, and then we look to do it again. Right? So nothing too crazy there. I just wanted to show you guys a quick example of pretty much my strategy and how it plays out, you know. I mean, there's nothing too crazy. This was Friday. This was a decent one. The low that you can see, the state is not super tight, but it's not narrow. It's not wide, I'm sorry. Right? So we marked the Fab4, which may be here. That's still a decent tight spot for price. Rectangular Fab4. You got the 200 in there. You got the 20 in there. Everything's in there. Right? We opened above the Fab4, so we're looking for longs. We just need a color change. We didn't enter here because the 20 is below the 200. We need this yellow to cross over top of the blue. Then we look for longs only. So that's why we didn't enter this. So right here, we're waiting, but our bias is still long, but we're waiting. Go back down. This area support inside of on top of the Fab4 shows strength, right? So we break back above both of the SMAs, and then we get this beautiful color change here. Boom. 20's above the 200. 200's looking flat, right? All we do is enter at the break of the red candle's high, boom, of the green candle. Don't wait on the close. Don't hesitate. You place your stop right here or at the 20 because it's so close, whichever you want to do. And then we're riding it to the new highs. And once we go to new highs, our stop loss is now the 20 SMA. So we're out of the trade up here instead of keeping our stop down here. Once we start taking some profit, that's what you do. That's how you manage these positions, right? And we caught this, and now we're in a wider state, right? But this is the move we wanted. This is the move from the narrow position, stayed above the Fab4. We didn't enter here because we're disciplined, and we don't enter when everything doesn't line up. We need the 20 to break above the 200, the 200 to be flat, then we're entering long, right? So that's a very, very quick rundown of pretty much my bread and butter, what I look for, color change entry at the 20 SMA. But everything has to line up, the Fab4, the location of the SMAs, and the candlestick entry event. So Yeah, just giving you guys a quick rundown of this, so I think this will be helpful for you guys. All right, I think that's it. Thanks, guys.